In a market that's captured the world's attention once again, whispers of a major Bitcoin breakout are growing louder by the day, while altcoins across the board are showing explosive signs of life as the broader cryptocurrency sector shifts decisively into bullish territory. Welcome to Crypto Hub, your trusted source for in-depth analysis and timely updates on the ever-evolving world of digital assets. Today, we dive deep into the current market dynamics, examining whether Bitcoin is truly on the verge of a significant upward move and how altcoins are positioned to capitalize on this renewed momentum. The cryptocurrency market has always been one of extremes, characterized by rapid cycles of fear and euphoria, but the patterns emerging in May 2026 suggest we may be entering a phase where optimism is not only justified, but increasingly supported by both technical indicators and on-chain fundamentals. Bitcoin, the flagship asset, has clawed its way back from lows around the $60,000 mark earlier in the year to hover near the $80,000 to $82,000 range, demonstrating remarkable resilience amid global economic uncertainties. This recovery has not been without its challenges, as the asset has faced repeated tests at key resistance levels, but the overall structure points to accumulation and building strength. Investors and analysts alike are closely watching for a clean breakout above $82,000 to $85,000, which many believe could open the floodgates toward $90,000 and potentially higher targets in the coming months. To understand the current setup, it is essential to look back at the recent price action. Following a period of consolidation and some geopolitical tensions that impacted risk assets broadly, Bitcoin began a steady climb. From approximately $63,000 to over $80,000 in a matter of months, the move reflects renewed institutional interest, particularly through spot Bitcoin ETFs that have seen consistent inflows. These vehicles have brought billions of dollars into the market, providing a solid floor and reducing the volatility that once defined the asset. As of the latest trading sessions, Bitcoin is trading around $81,000, showing modest daily gains and holding firmly above critical moving averages. The 200-week moving average, a long-term benchmark often cited by analysts, has acted as strong support, and the failure to retest deeper lows this cycle has many convinced that the bull market structure remains intact. Technical analysts are highlighting several key signals that point toward an imminent breakout. For one, the Bollinger Bands have tightened significantly, a classic indicator of impending volatility expansion. When combined with Bitcoin trading above its true market mean and short-term holder cost basis, the setup favors bulls. RSI levels are hovering in neutral to bullish territory without being overextended, suggesting room for further upside without immediate exhaustion. Furthermore, on-chain metrics show that long-term holders are continuing to accumulate rather than distribute, a behavior typically seen in the early to middle stages of a bull run. Whale activity has picked up, with large addresses making strategic moves that indicate confidence in higher prices ahead. If Bitcoin can decisively clear the $82,000 to $85,000 zone, which has served as resistance in recent attempts, the path to $90,000 becomes much clearer, with some projections even eyeing $100,000 as a realistic milestone before the end of the year. But what makes this potential breakout particularly compelling is the broader market context. The total cryptocurrency market capitalization stands around $2.7 to $2.8 trillion, with Bitcoin dominance near 58 to 60%. This level of dominance indicates that while Bitcoin is leading the charge, capital is beginning to rotate into altcoins, a dynamic that often precedes explosive moves in the broader ecosystem. Altcoins have indeed started to explode in select cases, with several major tokens posting double-digit gains over the past week and showing signs of breaking multi-month downtrends. Ethereum, for instance, while lagging slightly on a relative basis against Bitcoin with the ETH-BTC pair hitting lows, remains a core holding and is poised for recovery as Layer 2 solutions and staking yields attract fresh capital. Solana has demonstrated strength, trading near $95 with solid performance driven by its high-throughput network and growing DeFi and meme coin ecosystems. The altcoin resurgence is not limited to the top players. Mid-cap and emerging tokens in sectors like real-world assets, artificial intelligence, and decentralized finance are seeing heightened interest. Projects focused on tokenized treasuries and institutional infrastructure are particularly noteworthy as traditional finance continues to bridge with blockchain technology. analysts point to bullish divergences on weekly charts for many altcoins, alongside rising trading volumes and improving sentiment indicators. The Altcoin Season Index, while currently in Bitcoin territory, has shown potential to flip as dominance stabilizes or slightly declines. Historical patterns from previous cycles, such as 2017 and 2021, suggest that once Bitcoin establishes a new high or consolidates at elevated levels, capital flows aggressively into alternatives, often leading to parabolic gains that far outpace the leader. In 2026, with clearer regulatory frameworks emerging in key jurisdictions and institutional adoption accelerating, the conditions for such a rotation appear more favorable than ever. Delving deeper into the fundamentals driving this bullish turn, several macroeconomic and industry-specific factors stand out. Global liquidity conditions are improving, with central banks signaling potential easing measures that typically benefit risk assets like cryptocurrencies. The correlation between Bitcoin and traditional markets, particularly technology stocks and the Russell 2000, has been evident, and recent breakouts in equity indices have provided a tailwind. Moreover, the narrative around Bitcoin as a strategic reserve asset has gained traction, with discussions in policy circles about national holdings and integration into financial systems. This institutional embrace reduces the perception of crypto as purely speculative and adds layers of legitimacy that attract long-term capital. On the regulatory front, progress in the United States and elsewhere has provided much-needed clarity. Bills aimed at fostering innovation while addressing risks have moved forward, reducing uncertainty that previously weighed on prices. For altcoins, this environment is especially beneficial, as projects with strong utility and compliance can differentiate themselves. Consider the growth in stablecoin markets, which are expanding rapidly and facilitating more efficient on-ramps and off-ramps for traders worldwide. Stablecoins not only provide liquidity, but also serve as gateways for traditional finance to enter the space more seamlessly. Projections suggest the stablecoin market cap could reach significant new highs in the coming years, further underpinning overall crypto growth. Bitcoin's halving cycle also continues to play a pivotal role. The most recent halving reduced the daily issuance of new coins, tightening supply at a time when demand metrics are rising. Historical data from prior cycles shows that the post-halving periods often deliver the strongest returns, with prices peaking well over a year after the event. In this cycle, the combination of reduced supply, ETF inflows, and corporate treasury adoption creates a powerful supply-demand imbalance. Companies and even nation-states are reportedly adding Bitcoin to their balance sheets, viewing it as a hedge against inflation and currency devaluation. This behavior echoes gold's historical role, but with the added advantages of portability, divisibility, and transparency on the blockchain. As we analyze specific altcoin opportunities within this bullish environment, it is important to maintain a balanced perspective. Ethereum continues to evolve with its roadmap focusing on scalability and security enhancements. The upcoming upgrades and the maturation of restaking protocols could drive significant value accrual. Solana's ecosystem has matured, boasting fast transaction speeds and low costs that appeal to developers and users alike, particularly in gaming and decentralized applications. Other notable performers include tokens in the RWA space, where real estate, bonds, and other traditional assets are being tokenized on-chain, unlocking trillions in potential value. Meme coins, while volatile, have also captured retail attention and contributed to overall market vibrancy, often serving as entry points for new participants. However, no market discussion would be complete without addressing the risks. Cryptocurrency remains highly volatile, and external shocks, such as unexpected regulatory shifts, macroeconomic data surprises, or geopolitical events, can quickly reverse gains. Bitcoin has faced resistance multiple times near current levels, and a failure to break out could lead to a retest of lower supports around $74,000 to $78,000. For altcoins, the beta nature means they can amplify both upside and downside moves. Many projects lack fundamentals and could see sharp corrections once hype fades. Investors should prioritize due diligence, diversify portfolios, and employ risk management strategies such as position sizing and stop losses. The Fear and Greed Index currently sits in neutral territory, indicating that while sentiment is improving, there is still caution in the air that could prevent a full-blown euphoria too quickly. Looking ahead, many prominent voices in the industry are expressing strong conviction. Some forecasts see Bitcoin reaching $100,000 or even $150,000 by the end of 2026, driven by sovereign adoption and supply dynamics. Meta AI models and other analytical tools have projected ambitious targets up to $250,000 in optimistic scenarios, factoring in widespread integration into global finance. For altcoins, a successful Bitcoin breakout and stabilization could ignite a season where the total altcoin market capitalization challenges previous highs and potentially pushes toward multi-trillion-dollar valuations. The key will be sustained capital inflows and positive network effects across various blockchain ecosystems. It is also worth examining the role of technology and innovation in sustaining this bull market. Advances in zero-knowledge proofs, cross-chain interoperability, and artificial intelligence integrations with blockchain are creating new use cases that extend far beyond simple value transfer. Decentralized finance protocols are becoming more sophisticated, offering yields and services competitive with traditional banking. Non-fungible tokens are evolving beyond collectibles into utility-driven assets for identity, access, and ownership verification. These developments provide a narrative depth that supports long-term valuation increases, distinguishing this cycle from purely speculative ones in the past. Community sentiment and social indicators further reinforce the bullish case. On platforms across the web, discussions have shifted from despair during the earlier correction to measured excitement. Influencers and analysts are highlighting chart patterns that mirror successful breakouts from previous years. While one must always be wary of echo chambers, the combination of data-driven insights and organic interest suggests genuine momentum. Retail participation is picking up, but not yet at frothy levels, leaving room for additional inflows as prices rise and media coverage intensifies. Institutional players, including hedge funds and asset managers, continue to allocate portions of their portfolios to crypto, viewing it as a non-correlated or diversifying asset class. In terms of trading strategies for this environment, a balanced approach is advisable. For Bitcoin, waiting for confirmation above resistance with increasing volume could provide a high probability entry for trend followers. Dollar cost averaging remains a prudent method for long-term investors, mitigating the impact of short-term fluctuations. For altcoins, focusing on projects with real utility, active development, and strong communities can help separate winners from those likely to fade. Monitoring Bitcoin dominance closely will be crucial. A sustained drop below key levels could signal the start of a more pronounced altcoin rally. Tools like on-chain analytics platforms provide valuable insights into holder behavior, network activity, and capital flows that can inform decisions. As the market turns more bullish, education and responsible participation become paramount. Newcomers should understand that while the potential rewards are significant, the space demands patience and a long-term mindset. Established investors are encouraged to review their portfolios in light of current trends, ensuring alignment with risk tolerance and investment goals. The coming weeks and months will likely bring increased volatility as the market tests key levels. But for those positioned thoughtfully, the opportunities appear substantial. The interplay between Bitcoin's leadership and altcoin performance creates a symbiotic relationship that strengthens the entire ecosystem. As Bitcoin attracts macro capital and legitimizes the sector, altcoins benefit from the resulting liquidity and attention. This dynamic has played out in every major cycle, and 2026 shows every indication of following suit, albeit with more mature market structures and participant profiles. Whether the breakout materializes imminently or requires additional consolidation, the underlying trends point toward higher valuations and broader adoption over time. In conclusion, the cryptocurrency market is displaying clear signs of a bullish inflection, with Bitcoin potentially poised for a breakout and altcoins ready to explode on the back of renewed momentum. At Crypto Hub, we remain committed to providing you with balanced, insightful coverage as these developments unfold. Stay informed, invest wisely, and join us next time for more comprehensive updates on the world of crypto. Thank you for watching Crypto Hub.